I'm Sean Aylmer, and this is a Fear and Greed extended interview. All the other good bits we couldn't fit into the daily podcast. If you're looking for the daily episode of Fear and Greed, check the podcast playlist. Otherwise, enjoy the interview. During the next few days, we'll be a bit obsessed by the local economy, with tomorrow night's budget being the focal point. Ahead of that, I thought it was an opportune time to have a look at the global economy, what's happening in the world around us. To help us out, I welcome Diana Mousina, Senior Economist at AMP Capital. Good morning, Diana.
Good morning, Sean. Thank you for having me on.
When we went into the pandemic, where was the global economy up to?
Well, it was actually looking like a pretty good year for growth. If you remember, in 2019, we went through this down phase in the manufacturing sector around the world. We had the China-US trade war that was ramping up, that spooked a lot of manufacturers. Automobile production was collapsing, monetary policy hadn't been loosened yet. So all of these factors were weighing on the manufacturing sector towards the beginning of 2019. But coming into early 2020, these factors looked like they were fading. We had the first phase of the trade deal being signed, and we had obviously monetary policy being eased around the world, especially in the US. So people were getting quite optimistic about the recovery. And of course, the pandemic has completely derailed that. But hopefully, in the second half of this year, we should see a very solid pickup after very large falls in growth in the first half of 2020.
So you predicted that you'd have big falls and then there'd be a V-shaped recovery. Is that what's happening?
That's right. When the pandemic started, when it really hit the globe in March and April, there was a lot of concern about whether this would be a V-shaped recovery, U-shaped, L-shaped, Nike swoosh, whatever letter of the alphabet you want. It has actually looked like a V-shaped recovery, which means you get a very steep fall in growth, which is then followed through by a big lift. And that big lift has been generated by fiscal policy, by monetary policy, and also by reopening of economies. Now, more economies around the world are learning to live with the virus and still have sectors of the economy being opened up with some small restrictions in place. I guess what is important now is, after we see this initial bounce back in growth, what does growth look like after that? What will drive economic activity? Because if you can still see a scenario where we have to, of course, live with the virus into next year, even though we are likely to see a vaccine come through, it's unlikely to be completely available to every single person around the world. So you still have some concern about what 2021, at the end of 2021, looks like, and what growth in 2022 looks like. And that's where we are really dependent on more policy support from policymakers.
Okay, so where we stand now, what are your growth forecasts for the global economy for this year or next year?
So before the pandemic, we had been looking for growth to rise by about 3.1 or 3.2% this year, which would probably be around its long run average. That now looks like a fall of about 3%. But actually, back in March and April, it was looking even worse than that, falls by about 4 or 5%, and a recovery of about 6% growth in 2021. Most developed economies have gone through a recession in the first half of the year. China is one of the only economies that actually didn't go through a recession. They only had one negative quarter of growth.
Is China the most important offshore economy to Australia?
China and the US are both important in different ways. China is extremely important from the trade linkages to commodities, and Australia exports about 40% of our exports overall to China. That includes iron ore, coal, LNG, and then, of course, there's a huge amount of services in there as well, and agriculture. The services part is, of course, going to get hit over the next 2 years because of lack of education arrivals and tourism. The US is important from a financial markets perspective. And I guess the US share market, the US financial conditions really drives conditions for the rest of the world. And in Australia, especially as well, because it's a big driver of our Aussie dollar and what happens to longer run interest rates or the bond yield.
China, where's that one up to at the moment? Certainly manufacturing looks stronger in China than perhaps we thought it might be.
The recovery in China has been dominated by this huge boost to industrial and manufacturing activity. And that's where the fiscal support in China has been based on. It's been based on high infrastructure spending, more bond issuance as well towards infrastructure purchases. The consumer sector has been left behind a little bit, and that's because the fiscal support hasn't been as driven towards, for example, paying people unemployment benefits, doing wage subsidy programs. The consumer sector has been the larger focus in the developed economies, like in the US and in Australia.
So how is the US going? We hear all the dreadful stories about coronavirus, and obviously the presidential debate last week caused the headlines. But the actual real economy, what's happening on the ground?
The rebound in the US has been extremely strong. In the September quarter, quarter on quarter growth, GDP growth will probably be up by about 7%. That's
Wow.
huge. In the June quarter, the US fell by about 9%. But a lot of the cyclical industries in the US, again, areas like manufacturing and industrial production, housing indicators, they're all coming back up to their pre COVID levels. Retail sales is quite strong as well in the US, despite the fact that the unemployment benefit payment has come down a lot from its July peak, and that's why the fiscal stimulus package is trying to be worked through now to try and get another package through. But the cyclical indicators in the US have been extremely strong. So even though they are battling with a very big outbreak still of coronavirus, which is now coming through its second or third wave, if you really want to call it that, in different parts of different states, the mortality rate is looking a lot better in the US because it's hitting a younger cohort of the population. There's also better therapeutic methods to try and deal with the virus. And obviously, the hospitals have become more aware of about how to ward off the virus towards the more vulnerable groups like aged care homes and aged care groups.
Yeah. Do you think it matters who wins the election, Donald Trump or Joe Biden?
I think it will be a big impact for share markets in the short term. You can see a situation where, in the short term, a Trump victory would lead to a short term boost to shares because there's less risks around regulation and not concern about raising taxes, which is what Joe Biden is campaigning on, that he still wants to raise personal income taxes and also the corporate tax rate, which will hit corporate earnings. But at the same time, Joe Biden's policies in the longer run would see more infrastructure spending. They'd see more spending on climate initiatives as well, which would still provide you some boost to the economy, perhaps to offset some of those higher taxes. And he would probably, at the margin, be softer on the Chinese trade war. Not that he'd be soft on China, but you can see that he probably wouldn't have as much talk about issuing one off tariffs here and there to China. They might go about it in a more longer term way.
More consistent, perhaps.
Yes, that's a better way to put it.
Japan. We always used to talk a lot about Japan and how important it was to Australia, and it still is in a commodity sense, but how's that economy going and how important is it to Australia?
The demand for LNG from Japan to Australia is extremely high. That's actually our largest LNG exporter around the world. The Japanese economy has actually been lagging the rest of the world in the recovery. If you look at things like the PMIs, which are the Purchasing Managers Indices, so they're a really good guide to business conditions, and conditions there haven't been as strong. I mean, the GDP outcomes don't look terrible, but it's hardly firing on all cylinders. And of course, what's happened with the new prime minister there probably creates more political tensions and political risks in the short term.
Yeah, and Europe, of course, parts of that seem to not be travelling well at all, particularly Britain.
Britain is still a big risk around what happens over the next few months with Brexit, and you can definitely see a situation. I'd probably call it a 40 or 50% risk that by the end of the year, there's still no post-Brexit trade deal coming through, although there has been some better signs of it over the past few days around how talks are progressing. But the pandemic has actually brought Europe closer together, I think, because you've seen some more packages being announced between the southern and the more central parts of Europe. There's definitely been more coherence and more agreement to try and stimulate the Eurozone economy and to try and keep the Eurozone bloc as intact as possible in the pandemic. So I think it actually has brought Europe closer together. The wage subsidy programs have worked extremely well to keep the unemployment rate from skyrocketing in Europe. And I guess the risk is, how long can the governments there keep these wage subsidy programs going for? But in France and in Germany, they've extended them for well into 2021. I guess the issue now is how their second wave goes, and in areas like the UK, France, and Spain, they're having a big problem with COVID cases. But again, the mortality rate looks lower there, just like in the US.
You expect a V-shaped recovery, or the V-shaped recovery really is underway. What's the big risk to that? What'll stop that?
Well, the vaccine or chances of vaccine, I think, bring upside and downside risks. Our base case assumes that you do see a vaccine come through by probably the middle of 2021, but it probably won't be available for the majority of the population. Maybe 30% or so of the population will have availability to it. I think that the vaccine debate has been met with a lot of skepticism, but there are 10 providers now who are in phase 3 of vaccine trials, which is the last phase that you go through before you get approval from your government um, to broadly produce it and to give it out to the broad population. So I think that there's a really good chance that we do see a vaccine come through. And I think the majority of people, 50-60%, would probably take a vaccine based on surveys that I've seen. If we don't see a vaccine come through, though, then I think there'll be some downside risks to our growth forecast, because then you have to change your assumptions about travel overseas and also within domestic regions around the world, and more mobility restrictions still being in place. The social distancing, restaurants not being able to open at capacity. So in that situation where you don't see a vaccine come through, then the global economy would definitely look stronger by the end of next year. And also, our forecasts assume that you still see more support from policymakers, both from a monetary policy and a fiscal sense.
So, $1 million question, what's this mean for equity markets, for investors?
I think the next few months will be rocky for equity markets. Generally, I know the 2 months before the US presidential election it's quite interesting actually. In 87% of cases over the past few decades, the US equity market has been a good predictor of the US election. So if the incumbent president wins, then in the 2 months before the election, the share market tends to rally, and it tends to fall if the opposition comes in. So far, based on recent trends, the equity market is suggesting still a Donald Trump win. I mean, it's not obviously a 100% correct indicator, but in the next month, I think we'll see some higher volatility around a potential Biden or Trump win. My base case is still that you see a Biden victory just based on his performance in the polls, which I know we can argue whether they're trustworthy or not, but he's still beating Trump by a much larger margin than what Clinton ever was in 2016.
Diana, thanks for talking to Fear and Greed.
Thank you so much.
That was Diana Mousina, Senior Economist at AMP Capital.